Reading price charts, bar by bar. The technical analysis of price action for the serious trader. Chapter 6, Breakouts. Table of contents. Breakout entries in a strong trend. Breakout pullbacks and breakout tests. Breakout entries in strong trend. A breakout is when the market moves past the prior extreme. There are entries everywhere, but a good price action trader can enter earlier than a breakout. On strong trend days, there are many setups to take. As long as your stop goes in the proper place, the trader should make some profits. Look for a good high 1 and high 2s and low 1 and low 2 entries. Breakout points get retested. This could become a good entry. Bullish breakout entries. This was a short chapter, so I have a few more examples. This is a very strong bull trend, but it doesn't go on for a long time. The next one will be a little bit longer of a bull trend. So breakout entries, they're everywhere. I didn't want to clutter the charts. However, we put stops below the breakout. So here could be a stop, here could be a stop, here could be a stop. Here's kind of a skunk stop because it could come back and retest. The correct stop would be here, and then you wait for a new high to be made after a pullback, and then here. It's important to put your stop in the correct place because that's the point of a trend, is that it's a high probable trade. As long as your stop goes in the correct place and you enter off high 1s or high 2s. Here's a micro trend line break, so you could enter this with follow through because that is follow through. However, it's pretty climactic, so I think it might be better to wait for a small pullback. You enter anywhere, even if you bought the close of this bear bar, and you would make money between these two legs. I actually took this trade and I bought this high and I had to buy lower, but I still made money because my stop was down here. Here's a longer spread out bull trend, and so we can get a more broad overview that we can pretty much enter anywhere if we think about the last chart and we put our stop in the correct place. Stop would go here, a new high is made. Stop would go here, a new high is made. This is tricky because it's kind of a channel, it's a lot of overlap. A stop would go here and you would get stopped out here. You could put a stop here and you would be safe, but this is a new high, so you would get stopped out. Actually, you wouldn't. Excuse me. This is higher than this, so this is the correct stop right here because this is a higher high, a new low, and then a high is made. So you can see if you put your stops in the correct place, even I literally thought we would get stopped out here, but you won't. This is higher. This is a higher low compared to this and this. So if you put your stops anywhere after a new high is made, you shouldn't get stopped out as long as the trend is strong. You can buy any bar, buy the bear bars. You could buy this high, buy lower, buy the breakout, buy the follow through, buy the first pullback. Excuse me. Here's a deep pullback and it still reversed up and bulls made money that day. A two-legged pullback here that reversed and bulls made money. Strong reversal bar. So this is a really strong bull trend. You could buy anywhere and make money. Bearish breakout entries. Again, this is an extreme trend, and then I'll show you a more broad trend because I wanted to zoom in on the entries. Here we can see the market is range bound for most of the day, and then it breaks out late in the day and becomes really big. The bars are getting bigger and growing bigger, and they don't really stop until the next day. Correct stop placements would be here, here, and this is a tough one because it's very climactic, but since a new low is made, your stop would go here, and then a new low is made, you would move your stop down. So you go here, trailing it down in a strong trend, pivot, bulls get a pullback, or excuse me, bears get the pullback, and it goes with the trend. This is the first pullback. I don't know where I was going with that. And yeah, so you can see how anywhere you sell anywhere, you could sell the high of this, you make money, sell the high of that, you make money, sell these bars, you make money. You could even sell here with a wide stop, sell a little bit more, and you get very lucky and catch the breakout. That's a very low probable trade. I think the better sells were happening around here, and maybe after the first reversal. This is climactic. Here's a more broad bear channel, bear trend, same thing, spiking channel. So stops would go after a new low is made. Here would be, so bears make a low, you put a stop here, a new low is made, you put a stop here, and then look, bears don't make a new low until the next day, so if you were going to swing your position, you actually wouldn't get stopped out. Excuse me, I don't know if you guys are able to hear my dog in the background there. He's gone. I apologize for that. And then here's another new low. And then you can put your stop here, because that's the swing. Pulls back, kind of creates a double top for a new low. Stop goes here. And if you put your stop in the correct place and sell anywhere, you would make money. If you sold the high of this bar and then sold some more after the third leg, you would make money. This is a hard trade though. Or you could wait for the bear reversal test here of this EMA. Al talks about how breakout tests within a few ticks are good trades, and you'll see that in the following slides. Here is a breakout test of this, and it was a good trade. You put your stop there, you sell anywhere and you make money. Sell anywhere, you make money. All the way until the bear trend ends. Breakout pullbacks and breakout tests. Breakout pullbacks can come a few ticks away from the original breakout price. The test could come 1 bar or 20 bars after. The bar that tests the entry price can become a good signal bar and should be taken with a wick trend setup. Place an order 1 tick above or below the bar. If there is a pullback after the breakout bar, the breakout could be failing. Sometimes very strong breakouts can have 1 or 2 bar failures, then go back to trend resumption. These then become breakout pullbacks. Bullish breakout pullback within a few ticks. These are the same charts, I just kind of wanted to highlight different. It's the same thing, I'll show you. So here, bar 1 puts in the high of the day, and they sell off into the EMA, but bears sell off into the EMA, and bulls reverse into the high. So now we've got a range put in. You see this bar? This is what I would kind of start to consider the market is starting to break out, and then this bar actually starts to break out. Al talks about the bars that come with a few ticks of the original breakout could be a good trade. Look at this wick testing. This wick is testing these highs. And then we get a micro wedge bottom, 1, 2, 3, and this becomes a higher low. So now we have a micro pattern forming above the breakout and testing these bars. I think this is the best bar to enter. You could enter a little bit later with confirmation here. I think this bar is good because Al talks about how it should come within 1 tick of this, and it comes almost to the tick, a little bit better to the tick. So it does adequately test this bar. These words. It does a good job of testing this bar. And yeah, that's the trade that Al was talking about. A breakout within a few ticks, a breakout pullback within a few ticks. Here's another bullish example. Same idea, same context, but I like this entry and the way this trend looks. So I wanted to add it in. Pull back into the EMA and make a new high, and pull back, make a new high, and this is the first touch of the EMA. Here, so we're testing the EMA for the first time after the market's been trending higher. And we're testing this breakout right here. This wick encompasses all these levels, but the wick, so this wick is this width, but the low tick here is testing here. This is when the market starts to break out. We also have other tests here that are testing here. This bar is testing this high, but I just like the way this candle was a very nice reversal off the EMA, testing the previous bull flag high. And that bar leads to a good wick trend setup. It comes after a wedge bottom, 1, 2, and 3. The third leg is on this candle, so because the bears came down and reversed higher. So this is a good context long to take after testing the highs. Bearish breakout, pullback within a few ticks. This is the same chart here and here. We see that there's a lot more overlap within this chart. Excuse me, I meant to say there's a lot more overlap within this trend. And what I mean by that is there's more of a range bound, so we could see more tests, a little bit more pullbacks, but the concept is the exact same. The market starts to break out here below the EMA. I want to highlight these wicks and these candles because they're testing this breakout point. They're testing these candles right here. It's also a double top. This would be the double top on the EMA after breakout, so we could expect follow through for at least the second leg down. They get the second leg down. This bar tested that. This is a low 1, and this would be the low 2 because it comes at a worse price. If a low 2 comes at a better price, sometimes it could be a trap. In this case, it was a good context trade, so it's just a pullback to the EMA. Double top, a lot of good reasons to take this, and the one that Al talks about is it coming within 1 tick of the breakout. I draw this line here so you guys can see where it lines up with the breakout, because this could be a range. EMA gets pulled in and it breaks out. So I think this would be the testing area for the bears. It gets tested and sells off. Same exact thing. You can see kind of the low. I wanted to highlight this wick and then how these bars are testing this wick, this candle. Here's another breakout pullback, bearish breakout pullback within a few ticks, and these these things happen all day. There's a lot of overlap within these bear trends because we have been we've been bullish for quite some time now. Here we can see overlap, but the bears get the breakout and pull back into the EMA and create a double top and create another breakout. This double top is testing this original floor put in, its support right here. They break down for a few legs and they come back and start to test it. You can see the bulls are getting weaker right here, as the first time it actually goes to this candle. The second time it doesn't. So the bears are starting to sell more and more. You can see I highlighted the top of this wick to show like where it lines up within the support here. Same concept that the bulls and the bears have been doing. They're testing the previous breakdown. So here, this breakdown tested here, and that breakdown gets its own test here. So it's testing this wick, this candle's low, because that's also, remember, it's kind of lining up with the EMA. You can start to see how these levels start to line up over time. The EMA is always I like trading around the EMA when they break out. Here's the same pullback after a breakout, and it goes for a short. Here's the test, highlighting this low. This is the end of chapter 6. Please leave any questions in the comments and I will try my best to answer them. Thank you for your time, and if you learned anything, please consider subscribing. This was a really short chapter, so I tried to do a few more examples. Please let me know if you guys have some questions. Thank you. Bye.